If you've ever struggled to find some good volatility day trading setups on days like today in which the S&P is fairly quiet, then today's video is for you. The S&P today, relatively unchanged, minus 0.42%. The Dow, even less volatility, minus 0.12%. However, even amidst all of these index markets being fairly muted, there's always hidden volatility out there that most traders are simply unaware of. They might be random markets that you're just not thinking of, but there is volatility out there with an edge for you to take advantage of. In today's video, I'll show you how to identify that volatility edge easily and quickly using our Stock Volatility Box live scanner. The Stock Volatility Box live scanner is a custom scanner that we've built inside of our Stock Volatility Box platform. It scans every 2 seconds for new volatility setups in 10,000 plus markets. I like to describe the live scanner as your personal trading assistant whose only job is to go out there, refresh every 2 seconds, and give you a running list of all of the best volatility setups. Now for today's video, to keep things nice and easy, we're going to be focusing in on the overlap tab inside of our live scanner. Think of the overlap tab as our best of the best volatility opportunities. It looks for places in which we have our hourly volatility models being breached. That means we now have an edge with regards to how price moves every single hour. It combines that with places in which we have an edge using our daily volatility box models. So similar to the hourly, except this time it's our daily volatility models. And the overlap tab looks for this region right here, the overlap. I'll leave a link to a video which breaks down the overlap tab along with the hourly and the daily in a little bit more detail in the description box below. Now there's one simple setup that we're looking for, and that's detailed in this video, which I'll also leave in the description box, and you'll see an example of that as we go through setups. It's a fairly simple setup. It walks through the different steps that's required, and it's our momentum reversal setup, which has been really lucrative, at least as of the recent volatility. Now, from all of the different stocks that triggered on our live scanner, there were a handful that stood out today. The first one was Apollo Global Management, and the reason it stood out, it appeared on our live scanner 2 different times. First, breaching our aggressive models, and the second time, breaching our conservative models. So we'll dive into this one in a little bit more detail. I also want to touch on a few earnings plays. So Skyworks is going to be an example that we use there. And then the last one that I'll discuss in today's video is Carvana. I think another large name that a lot of folks just have their eyes on. Now let's start first with Apollo Management. I'll load in APO and we can dive into this chart a little bit deeper. Now first thing to notice, Apollo Management reported earnings today, and earnings was a beat. So our bias here would be to the long side, especially if we had a sell-off into the morning, we'd be looking at buying that left and right. However, in today's case, as we would expect, we saw a rally right out of the open. Now the first time we had Apollo on our live scanner is when it breached our aggressive models. Now here, we don't see the same setup rules being met for our momentum reversal setup as we did the second time. The second time is the one I want to focus in on, but hopefully, as we discuss the 2 different setups, you'll see the differences. Now, as part of our momentum reversal setup, there's a few conditions we're looking for. First one, and the one that's most important, have we breached our volatility models? In this case, we had breached not only the aggressive, but also the conservative, so that tells us, yes, we have a volatility edge here. It's appeared on the live scanner. There's a reason we care to look for a setup in the first place. Now, once we have that, we're starting to dive in for a few more technical conditions. The first of which is, do we have these Keltner channel wedges plotting? We want to see at least 5 plus of these wedges, and that tells us that price action is outside of the 3.0 Keltner channel for at least 5 plus bars on whatever time frame you're looking at. So here we can see 1, 2, 3, 4, 5, 6, and even a 7th wedge. So we definitely exceeded the 5 plus wedges that we'd be looking for. So that's step number 2, and we had that condition being met. Now step number 3 is looking for our overbought confirmation signal, and that's these red arrows on our chart. That tells us that, hey, we officially now think we're in an overbought territory. We have a volatility edge. We have the Keltner channels telling us we're expecting a reversion to the mean. And now we even have our overbought signals printing, in this case, once and twice. Now, for those of you that like to add in one additional confirmation, that's where you can use something like the momentum cross. That's this pink dot that you see on our charts, and this is probably the simplest indicator out of them all. It looks for the 3-period exponential moving average to cross either above or below the 8-period exponential moving average. If the 3 crosses below, we see the pink dot, which tells us momentum is shifting to the downside. If we see this blue dot, that's the 3 crossing above the 8, telling you momentum shifting to the upside. Here we can see the buyers tried for 1 bar, and that very quickly got rejected by the sellers. So this right here is that ideal setup we're looking for, and Apollo Global Management was a good example of that. Even though the setup came later on in the day around 11 a.m. Pacific, we can still see how that held our volatility box models. We then saw sellers gather their momentum, and into the close, we saw that nice bit of selling activity taking us even to the target line of the aggressive volatility box. So Apollo Global Management, hopefully you could contrast the aggressive volatility box breach here to the conservative and see the very clear difference between the two and where we have a clear edge. Now the next one that I'll go through as an example is Skyworks. Another earnings play and another place where earnings was a beat. Now here we can see that the aggressive models have even shrunk where it basically looks like they've flipped. This is telling us just how much volatility there is inside of Skyworks on the backs of this earnings result. Now, same setup though here. We've exceeded the conservative models, so that's step number 1. We then see 5+ of these Keltner channel wedges, so that's step number 2. We then see 1 and 2 oversold or overbought confirmations, and we even see the momentum cross. Same idea as what we just discussed inside of Apollo. The buyers tried one more time, very quickly rejected by the sellers. We can see that little flush down momentum that took place before buyers again tried to bring price action up, could not break above this mark all day. Again, sellers came in and we chopped between this range right here. The key reason I wanted to point out Skyworks is to show you what extreme volatility looks like on the backs of earnings. You can see that here very easily with the sandwiched volatility models. Now the last setup that I'll discuss is Carvana. Carvana here, if we zoom in, we can see that setup took place as price action breached not only the aggressive volatility box models, but also the conservative models. So let me zoom in here. Now remember, we had our first step, which was the models being breached. That got hit both once and twice with the aggressive and conservative models. We then want to see 5+ of these wedges, and here we only saw 1, 2, and 3. So we didn't quite hit that condition. Still thought it was worthy to show this setup though, so you can see what an imperfect reversal looks like. So here we had 1, then a little bit of a pause, and again we've gone outside of the 3.0, and here very quickly now the sellers reject price action. We make a new high for the day, the high bar even prints here, the high chart bubble, and that then leads to a very dramatic reversal, which is not only a bearish engulfing candle, but a pretty strong reversal compared to what we've seen so far. After that, we see the momentum cross 2 bars later with this candle right here, and that candle then, after we zoom out, you can see the flush that it brings down with the sellers coming in full force. Now this setup was not ideal, not one that I participated in, especially because we fell short here on even that second condition, but still gives you an idea for some of those markets where there's a lot of eyes on that particular symbol. Sometimes the rules, even bent a little bit, tend to work out given the sheer fact that so many people are watching this for a reversal. So again, one more time as a quick summary, on a day like today in which the index markets were basically unchanged, we saw the Dow was a great example of that with that plus 0.12 or minus 1.2% change move for the day. On days like this in which the index markets are quiet, you can still find some really nice volatility setups using our Volatility Box live scanner. It does much of the heavy lifting for you, finds these setups for you, delivers them for you, and you can pick and choose based off of the ones that fit your trading style. In today's video, we focused on the momentum reversal setup. For Volatility Box members, there's also the fade setup, which I'll leave a link to in the description box below. Take care, everyone. Good luck trading, and I'll see you in our next update.